We are really happy to receive Rob Lake today in our digital conference. Rob, many thanks for accepting to be with us today. We are going to discuss maybe these concepts, but you are a responsible investor, an impact investor, working a lot on making sure that sustainability and people are linked together, as well as corporate growth in a way. And we're happy we have your website written down on this same page. I would like to basically start with the first question. On your website, you mentioned sustainability, investment, people, and you say that they are interconnected. Can you please develop this concept for us?
Well, thank you. First of all, thank you for the invitation to take part in this event, activity, conference. It's a pleasure to be with you today. Yes, I describe my work now as being at the interface of sustainability, investment, and people. I've worked in sustainability for most of my career, for about 30 years. I've worked in the investment industry in different roles for the last 18 years. First of all, with an asset management firm, then with a large pension fund, then with an international network of investors, and now for the last 6 years independently. And throughout the whole of that time, the whole of the 30 years, I've worked, of course, with people in organizations of different kinds. But in the last 3 or 4 years in particular, I have been focusing more and more strongly on the human dimension of work in sustainability and work in the investment industry. Because very strangely, in a way, in my experience, most of the work that is done under the banner of sustainability by people who seek to bring about change in organizations and change in society, including the work that is done with that objective within investment organizations, now under the banner of terminology like responsible investment and ESG and so forth. Most of that work is very technocratic. It very often doesn't have much of a human dimension, even when we're talking about social issues like working conditions in supply chains. Those are human issues by definition. We're talking about the conditions in which real human beings work. But the way that that work is done within investment organizations, for example, tends to overlook the fact that the people within those organizations are themselves human beings. We think that the only way, automatically, without even stopping to think about it, we think that the way we need to frame and present arguments in order to persuade people that change is necessary is very technical, very technocratic, very rational. And we have, in fact, worked very hard and quite consciously to avoid words like morality, to avoid talking in more human terms. Morality is a human thing. It cannot be separated from emotions and feelings, the way we respond to the world in a way which is not simply a response with our heads.
It's interesting.
And so that's why I talk about the relationship, that's why I talk about the relationship between sustainability, investment, and people. And I'm talking about the people within investment organizations and the people who surround those investment organizations in society as a whole, in supply chains, in real places that are affected by the companies in which investors invest, and so forth.
Sorry, I didn't mean to interrupt, but this place of the people in your thinking led me to realize that business ethics or integrity and business are actually considered as a different field.
Yes.
Yes, and that could be one of the major issues that we're facing.
Well, just this morning, literally 5 minutes before we started this call, I read an article in the Huffington Post by an NGO campaigner working for a small development NGO here in the UK. And the headline in the article was something, and coincidentally, the author, the writer, whom I don't know, works for an organization that I used to work for 20 years ago. And the headline was something about how we need to forget the business case. We need to stop making the business case for change by corporations or investors. And we need to start or rediscover, I would say, the moral case for the kinds of change that we want to see. Now, we know why, and I think that's overstating it slightly, we need a business case, but the question is, what constitutes a business case? What constitutes an argument to which people working in a company or an investment institution will respond? And I think we fall too easily into a set of assumptions that lead us to believe that the only kind of business case that is possible is one based on numbers. Mm-hmm. Actually, companies and investment institutions are, devastating insight here on my part, they are organizations. What are organizations? They are groups of human beings. And actually, despite company law and fiduciary duty and all those other legal definitions of what it means to run a company or to be an investor, real decisions in organizations are driven and motivated not just by numbers and by technical arguments, but by the sense of morality or by the heart of the people who make those decisions, not just by their heads. Those people will very often deny, certainly in public, that emotion has a part to play in what they do, but it's simply a human reality that is the case.
Yes, but I think one of the problems that we hear often is that there is a huge challenge in comparability. Yes, the competitiveness, is still here, but how do you compare these soft issues? And this is why the ESG terminology came on, or the triple bottom line. What is your say on that?
On comparability? Well, I think it's interesting to ask ourselves why we want to compare companies and for what purpose. Investors want to be able to compare companies so that they can decide whether to invest in one rather than another, or to invest more in one and less in another. So there are good reasons for wanting comparability, but to pursue comparability at the expense of meaningfulness in our understanding of what is actually happening in relation to an individual issue seems to me to be rather strange. It implies that we're pursuing the wrong objective. So sometimes perhaps we will have to accept that comparability is not an appropriate objective if the only way to compare means putting numbers on things, which we often assume. And if numbers are not meaningful in a certain context, particularly, of course, with social and societal issues, environmental issues, for all the complexity, in that sense might be slightly easier because they lend themselves much more readily to expression in numerical terms.
Rob, we ask everyone, what does public value mean to you? But I think you came to a good explanation that it's about redirecting the economy to the heart and to the human being, putting the human being at the center. Am I right? Did I understand you properly?
Absolutely, that's a way to express it. And the additional dimension to that, because the way you put it certainly captures my approach. Some people might respond to that by saying that it sounds very selfish. I'm not
philanthropic.
Or philanthropic, yes, or possibly philanthropic. I'm not talking about, when I say put the human being at the center, I'm not saying put this human being, put yourself at the center of decision making. Because the other very important dimension to this, I think, is the concept of interconnectedness and interdependence, that we are all I mean, you could say, possibly slightly philosophically, or even spiritually, that right at the roots of many of the problems we face lies the fact that we have forgotten, or we no longer recognize the extent to which we all really are interconnected and interdependent. Human beings depend on the natural world. Human beings depend on each other for meaning, actually, for fulfillment in our lives. Very few, I mean, there are, of course, cases of individual human beings who make very conscious choices to spend all their time alone, but the overwhelming majority of people depend on other people. And if every time we took a decision, as not just as board members or senior people in companies, but as any individual at any level, if every time we took a decision, we were able to reflect deeply on the implications of that decision for the natural environment on which we ourselves depend and for other human beings with whom we have a connection, then many decisions might be made very differently.
Rob, you have worked, as you explained to us, quite a number of years in investment or with the investment community. How do you convince corporations that this is the way to go and that they need to bring changes in their corporate strategy?
Well, many different tools and instruments are needed, of course. And many of those are now very familiar. We have all the work that's done on corporate reporting, on impact. We have people adopting campaigning approaches to try to generate pressure on companies by threatening companies' reputations. We have all the work that is done to try to put financial and economic value on different assets or resources or different dimensions of the issues we're talking about. And then there are legal approaches. A lot of work is being done, of course, in the investment industry to change the legal understanding, the legal definition of investors' primary legal obligations, namely fiduciary duty. That works in slightly different ways in different countries around the world, but basically fiduciary duty, or its equivalent in different markets, says that the investor's duty is to put the financial interests of the customer, the client, or the pension fund member first, in a situation in which we're increasingly seeing that, although I don't like the term, ESG issues, environmental issues and social issues and so forth, are financially relevant, do have financial implications for investors because of the way the world is now evolving. It doesn't make sense. It's simply not realistic anymore to say that those issues are not part of an investor's fiduciary duty. So the legal case, the legal arguments are important, financial arguments are important, campaigning pressure by organizations that are well placed to encourage consumers or the public at large to put pressure on companies, that's important. We need a whole range of different arguments. But to come back to what I was saying a moment ago, which I confess is my hobby horse, my obsession of the moment, the tool or the instrument that we have almost consciously chosen not to use is to speak directly to people who make decisions as though they were human beings, not just as though they were people wearing a corporate or an investor mask and with a professional identity. I think trying to rehabilitate our personal identity in all this work that we do and in the relationships we have with people who make decisions that then have impacts on the world is incredibly important. We are almost, by saying that personal dimension doesn't have a place in our work, we're cutting ourselves off. We're almost going into battle with one hand tied behind our back. It's as though we're consciously choosing not to use or to access a source of energy, I think. The energy that comes from people making contact again with their own values and what they really think is important deep down.
the energy of value. That's quite interesting and needs to be really developed. If we compare the field of sustainability or public value, considering the needs of society and the environment at the same time and not picking on, I often make the parallel with the fight against corruption. 20 years ago, 25 years ago, at least in Germany, where the global NGO was created, Transparency International, bribery was tax deductible. Yeah, so tax deductible 25 years ago in most of the European countries, at least. A long journey has been accomplished, and we now see that it's totally immoral to enter into bribery and corruption, and it's illegal. Do you think we could actually see the same path for public value or sustainability?
Well, that's an interesting question. I think public value is a very high-level concept.
Yes.
In relation to some of the issues that are important within the concept of public value, within the concept of I suppose you could call it shared responsibility as well. Mm-hmm. With some of those issues, I think we are starting to see a broader acceptance of a notion of shared responsibility, of you could call it a business case, but a business case that is becoming much, much broader. So, for example, with all the urgency that is now developing in the way that we look at climate change, with the impact that Greta Thunberg has had and that Extinction Rebellion has had in certain countries, I think the mood, the general level of or expression of the basic assumptions that are now made in society about what constitutes appropriate behavior are shifting. Mm-hmm. And there's a long way to go, okay? But a lot of people, and this is just one indicator among many and possibly a slightly flippant one, but there's a lot of stuff on Twitter about flying less.
Yes.
There are Twitter accounts created by organizations that are all about encouraging people to fly less. Now, we haven't quite got to the stage where anybody standing in a queue at check-in at an airport is considered to be morally bankrupt. We're a long way away from that, you know. But there is a sense developing that more people are reflecting more about some of their personal choices in their lives in relation to climate change. And similarly, I think again, it's not quite as highly developed, but the publication, you know, we're conducting this interview just a couple of days after the publication of the big report on biodiversity. 1 million species threatened with extinction.
Yes.
It's pretty hard to remain completely unaffected or unmoved by that.
Yes. I would like you to stay on this example of flying and not flying, because we have here 3 possibilities. Either we wait or we encourage people, citizens, customers to feel ashamed, and the pressure will come from society, which has been the case in the nuclear industry, but just after the awful tragedy of Fukushima. Or we work on the companies themselves, and that is a little bit more complicated, as I hear you, because we want to demonstrate that they would make money if they were to do it differently, which we're not sure. Or we work on the government. So, well, there is a multi-stakeholder approach here, because recently I wanted to go not far in Europe, and I have to say that flying is a lot less expensive than taking the train. right? And I'm not saying that the train is totally carbon free, but it's still a bit less problematic. So the train is longer. I was ready to do that effort, but it's 3 times more expensive.
Yeah.
So how, if we take this example, how do we actually function with that? Do we go with a multi-stakeholder approach with the 3 elements at the same time, and it takes time? Or is there a particular argument that you would use?
No, I think we have to operate on many different fronts simultaneously, and different organizations will specialize in working in different ways. And it's true that in the case of many people, because of human nature and the way we are, simply trying to make people feel guilty to spur them into changing their behavior might not be very effective. But there will be some people who respond to the bad news that we constantly hear about climate change or other issues by reflecting on their own behavior and by starting to operate differently. Clearly, a lot has to be done to make it easier for people to change the way they live. That's obviously a big discussion, and people need to be given reasonable choices. But some choices, as you say, between flying or traveling by train, even over short distances, can only become easier if there's government intervention. I mean, it's absurd that aviation fuel is not taxed, for example.
Exactly.
It's absurd that short-haul flying is still so cheap. And yeah, what I'm saying is not a radical insight, clearly. The impact that a significant carbon price would have across the entirety of the economy would be enormous. A lot of care needs to be taken, of course, about the social impacts of that, in order not to disadvantage the people who already are least well off, and to increase costs for those people. But clearly government intervention is needed as well. And we have to bring every possible tool and tactic to bear, I think, given the seriousness of the issues that we face.
All right, so we cannot actually live without the governmental approach.
No, we need government action. And for all sorts of reasons, it has become very easy for governments in recent years to avoid responsibility and to give responsibility to companies or to investors. The governments now are getting very excited, I think, with the encouragement of investors, about the potential for investors to bring about positive change. Governments, of course, always find it difficult to take action which they believe will be politically unpopular.
Yes.
Like introducing.
Yes.
Yeah, exactly.
Yeah. It's from a carbon tax.
Yes, exactly. But unless some very fundamental changes, like the introduction of a serious carbon tax, are made, investors will have to continue to operate within a framework that makes certain kinds of change for investors and for the companies they invest in very difficult and very unattractive, because the business case in the conventional sense will always have its limits unless prices change or regulation changes. Yes, by taking certain kinds of action, some companies can continue to prosper, or maybe outcompete their rivals with new products, better offerings to consumers, and so on. But if all that takes place in the absence of a decent carbon price, or with continuing very weak regulation on labor standards in supply chains, et cetera, then the scope, the potential, the headroom for corporate change in relation to ESG or sustainability or public value issues will remain limited, I think.
Yes, I think the biggest challenge, or the catch-22, as the American friends would say, is really to make sure that people embrace long-term decisions when they basically depend on short-term decisions. So the career of a politician depends on a short-term decision, the same with the CEO of a big company. And so we have here a fundamental challenge. You mentioned the long-termism on your website, but how do you convince the people you talk to as an investor?
Well, there are a whole lot of structural features in the investment system that tend to push investors towards short-termism, the way that investors' performance is measured over short periods rather than long periods, and the way that performance is measured leads then, of course, to the way that investors are rewarded financially, as individuals and as companies and organizations. And so those things need to change. Work is being done to try to do that. A lot of effort is being invested by certain large long-term investment institutions, big pension funds, working closely with some companies to try to change the way that investors think about their decisions. There are fundamental things about human nature, of course, that come into play as well, that we tend to, psychological research demonstrates very clearly that we value short-term immediate rewards much more highly than things that are uncertain and a long way in the future. But all these things are interconnected. I think all these things are interconnected. We need effort to change the way investors think and operate. Some of that involves effort to change aspects of the structure of the investment system, things like benchmarks, which investors use as a guide to what they're going to invest in and how they measure their performance. Benchmarks need to be adjusted to reflect sustainability or public value issues far more strongly. People are now experimenting, for example, with using the Sustainable Development Goals within investment benchmarks to steer investment towards companies that are closely aligned with the SDGs. So there are those structural factors within the investment system. And then, as we were saying a moment ago, changing the investment structures should not be a substitute for government intervention and government action on multiple fronts to ensure that prices in the economy reflect sustainability through appropriate taxation and through regulation in areas where prices don't exist or are not appropriate.
Rob, we're coming to the end of this conversation. Is there a particular advice that you would give to either your colleagues, investors, or corporations, or even politicians to get started and to really join us on this journey?
You know, my advice would be derived from experiences that I have had with colleagues in investment organizations over the years, in situations where what I was talking about before, the human dimension, has come into play. And my advice would be to an individual portfolio manager in an investment institution, or a chief investment officer or chief executive of an investment organization, or an executive at any level in a company. If you are called upon to make a decision, which of course people are all the time,
yes,
pause for a moment, take a few deep breaths, close your eyes, and think about your own deepest personal values. Think about your family and your friends, and what kind of world you want to live in, what kind of world you want your children and your grandchildren, if you have them, to live in. Open your eyes again, look at your screen or your papers for the meeting, and think about the implications of that decision that you are being called upon to make in that context of your own values and the people you care for most, the people you are connected with, the people you don't have immediate connections with around the world, but the people who could be affected by your decision. And then go into your meeting or make your decision.
That's quite fascinating, and you did demonstrate how important is the energy of values, as you said earlier. I want to thank you deeply for this very interesting conversation, and I hope we'll be in touch again soon. So thank you again, Rob.
Thank you, Virginie, for the opportunity. Good luck with the project.